our next speaker, here to tell you a little bit about his company. It's the CEO of Jushi Holdings, the one and only James Cacioppo. Let's hear it for James.
All right, thank you. I am doing a little different type thing here today, hopefully entertaining. Green is go. No, I did that wrong. Oh, here we go. This green. Can you guys help me? Well, anyway, I'm going to tell you about it. Somebody help get my thing. But I was a hedge fund manager for many, many years and investing in the sector, multi-billion-dollar hedge funds. I started investing in the sector in 2015, and I wanted to give you some perspective, given how the stocks are trading. You know, it's pretty shitty. Which one is the green button? It's that one right in the middle. There you go. Okay. So I want to give some perspective, you know, because people, I think, have lost sight a little bit of what's going on. You know, the growth rate in the industry is projected to be tremendous. It's tiny. It has huge upside, and I think people are kind of maybe forgetting that right now. I'm not going to spend a lot of time on that, and it's really cheap. You know, you look at the growth rate down there on the, you know, the horizontal axis, and you know, it's one of the fastest growing industries and valued, you know, very, very low on the multiple side on the vertical axis. Tons of upside. So you just heard from Boris, and you know, completely different company. You know, big, kind of like an index fund. You can buy MSOs as big indexes. Jushi's a different kind of deal. You know, we are the fastest growing company in the sector. We're providing a lot of alpha that goes along with that. And the EBITDA, you know, we're very, didn't generate a lot of EBITDA last year, but we're really kicking into an EBITDA story by the end of this year into next year. We're highly concentrated in a few emerging markets, and I'll go into that with favorable regulatory dynamics. So you're going to get, event-driven risk on the upside if that stuff happens. One of them already did in Virginia, which I'll tell you about. We have expansion opportunities in our existing states, which is a lot cheaper. You could basically bolt on stuff, with the cost of developing the asset. If it's a license deals, which are cheaper, like for 2 times EBITDA, right? So that's a lot cheaper than 5 times, 7 times EBITDA, and we have a lot of that in our current footprint. And then, our track record is best in class. I'll just take you through that briefly, and then the liquidity position, and then we'll do a little bit of Q&A. So this is what we've done. 10 million in 2019, 81 million, 2009, and the 81 to 2009 was primarily organic growth. We had one acquisition that we did in the middle of September last year. So we got a little bit of credit for that in the fourth quarter. So, that's just tremendous, organic growth, as you can imagine. And then this year, we have a combination of organic and acquisition-oriented growth. So it's not like in that big number between 81 and 209, we merged with another company or did a huge acquisition. That didn't happen. That's us building out our business. That substantially precedes, which I'll talk about a little bit, in that 209 to the exit of about 400 million at the midpoint there. And then we have great M&A opportunities, and I'll talk about our track record. So you get this organic growth with the accretion that we have a track record. It's not just like we're starting this today. And then this is the map. California, we're very tiny, and it's kind of like an R&D project. We'll have 4 dispensaries open by the end of the year. We're learning. We've been there for years. Really put a pause on it. We haven't spent hardly any money. Every one of them was kind of a distressed deal. But and then we have our big states are Nevada, Pennsylvania, Illinois, Ohio, and Virginia is small, and Massachusetts is pretty big too. But if you look at this emerging markets with favorable regulatory developments, you have Ohio, which is supposed to go on the ballot. That's furthest out there. Virginia is already rec in 2024. They've already passed it. Governor signed it, the whole deal. We just got passed in April, and we worked real hard on this, a medical improvement bill. And basically, you don't need cards in Virginia anymore. You get something, and this is not meant for the regulatory audience. I'm just simplifying it, of course. But you can go and get very easily permission to buy medical cannabis. And in Jushi's case, we're planting grow rooms starting last week, a whole new expansion in 93,000 square foot facility. So we have the capacity to meet a lot of this demand. And our license is very unique in Virginia. We have the exclusive right to serve Northern Virginia, meaning there's no other retailers. We control, that market substantially, and we're putting 6, I would say, superstores. I like to joke around that it's like Planet 14, but these are 10,000 square foot stores with 75 parking spots, really, big time express, and then you can do delivery out of the store. I was talking to one of my colleagues in the industry, competitor, one of the big ones, and she mentioned that it's a very tough market in Florida, delivery, but we think it's going to be economic I'm not in Florida, but it's going to be very economic in Virginia. So it's really cool that we can learn how to do delivery. We have this exclusive right. And then PA, we think a rec bill, you'll see this happen coming out of the Senate in May, which is pretty cool. And then Ohio, I talked about, there's a process there. And the interesting thing about this, if you look at our market cap, you look at where this is very, very significant relative to Jushi. It's not like we're Curaleaf, just to use the Boris analogy. I don't know that much about federal. I can't educate you that much. I learned some stuff from him. But this stuff affects our business in a big way if it happens, okay? And that's not in our numbers. And then expansion opportunity in our states. Ohio should be on there too. We have 4 bolt-on more deals we can do in Ohio. We just won a dispensary license. Nevada will buy some more dispensaries, expand our grows. Illinois, we won a license. We'll buy 5 more licenses. We'll buy a grower processor. We're in these markets. In Massachusetts, we'll buy another dispensary. Those in-market deals are like 2 times EBITDA. That's real. That's a real deal. That's what you want. You don't want to have to go into a new state and pay between 4 and 7 times EBITDA. I would never pay 7, but others do. And then the track record, to keep it simple, in Illinois, if you look at the Illinois line, and I know most people can't read it, but we have $80 million of revenues that we paid $12.5 million for. In Pennsylvania, we paid $80 million for 18 dispensaries. If you go look at your press releases for some of the companies, they've been paying between 50 and 130 for 3 dispensaries. So we were early in really good markets. The Virginia vertical that we got, a vertical license with 6 stores, delivery, $33 million bucks. This is stuff. So when I tell you we're doing, the accretive way we can grow with acquisitions, I'm not just, a promoter up here telling you this. I frankly don't know how to promote. But what you see here is we have the track record. We've done it before. So I'm a hedge fund guy. You can't manage people's money and get to multi-billion dollars if you don't have a track record. And in cannabis, you shouldn't invest in companies that say they could do M&A if they don't have a track record. We have the track record. And then, we have, at the last time we reported, we have over $100 million in cash. On the acquisition facility, we have another 65 available. We have an accordion feature. That includes the accordion feature that takes it to 125. And so we actually raised equity in January, and it was only $14 million bucks. Very strategic investors. Some of this, they let us use their names in the press releases. And there's, I think some of the most sophisticated investors in cannabis. And you can get our presentation with that if you like. And I think Kevin's coming up to ask me some questions.
All right. Let's hear it for James one more time. All right.
Go Jushi.
So before we get to questions that were submitted prior to the event, just want to first see if we have any questions from the audience. If there's any questions, please raise your hand. We got a mic runner who runs around to get a mic. Where's our mic runner here? We got a Crescent in the front row. Maybe easier if I, maybe easier if I get there. Here we go. Please introduce yourself. Let us know your name and what company you're representing.
Marty Feinberg, Winning Communications. Is Jushi a public or private company?
Jushi, it's public, ticker symbol JUSHF in the U.S., and you could buy it in Canada too.
Jay what?
Jushi, ticker symbol in the U.S., JUSHF.
Oh, that's
James, Usher, Sam, Harry, I don't know, Frank.
There we go. Letters are hard.
Yeah.
Any other questions?
That's a good question. That's how you buy the stock.
All right, and give that ticker symbol one more time if anyone didn't get it.
What's that?
Give that ticker symbol one more time.
JUSHF.
All right. So I think we'll get to our pre-submitted questions. First, the founders funded this company, unlike most others, had outside investors. Why is that?
Yeah, so we started the company, we didn't have this M&A track record. We had a presentation. I like to say, I know I shouldn't do this, but they're getting sold, so I'll do it. I like to be a little controversial, so what the fuck. But, when we started in 2018, we had a slide deck. We had the founders' money and some friends who invested alongside of us. It was added up to 35 million. Ultimately, the founders put in like 50 million. I'm obviously the largest as the CEO. There's a former CEO of Organigram in Canada that was very successful who put a lot of money in. So we had a strategic investor, and he's a friend of mine. But we had nothing, and that's 2018. And Columbia Care just sold to Cresco, and they had all the licenses in the world. We missed that whole thing of getting licenses, in a big way. We're getting in a small way, but a lot of the country, the portrait is painted right now, pretty much in this stuff. You can't win that many anymore. So it's really the M&A skills, and our market cap now is not that dissimilar to Columbia Care, who in 2018 had all these things. And I think that's great management. We put a really great management team together. I didn't see any good management teams that I could invest in, keeping in mind that Trulieve wasn't public, GTI wasn't public, but I didn't see any great management teams out there. I decided to start the business. We needed to put our cash in to actually have money to invest and to show our commitment. And we wanted to make a lot of money, so that's what we did.
All right. Next question. What are the key markets for you and future markets?
Yeah, I think they got a little bit of thing, but, with Jushi, it's an outsized play on PA going rec. Again, something's going to drop. We have 18 dispensaries. There's only one company with more. They're not open yet, but Trulieve will have 21, GTI 18, so we're right in the top 3. And our grower processor, we just have a brand spanking new 45,000 square feet of canopy just getting planted, or the equipment's going in, getting planted in June. And that takes 81 to 125, and we have an expansion plan to take it to 210 once we feel like rec's going to happen. I have the plans; they've been submitted. Boom, we have the financing, we got the cash. Boom, we'll go, and we'll get big early as it flips over to rec, because there'll be short weed again. Everybody's worried about the prices and margins in Pennsylvania, but what happens in these states is we all invest knowing it's going to adult use, or thinking it's going to go to adult use, and then you get a little bulge in the amount of weed on the market, and now it's getting absorbed by the medical market growth, but it's going to be very short once it goes adult use. So super excited about that. Volumes will go way up, prices go up, industry will invest. We'll get prices back down for customers, because that's what we do. But it's a natural cycle. So we're a little bit overbuilt right now. We'll go underbuilt. We have this huge footprint. That's huge for Jushi. And then Virginia, it's like the sleeping giant. We have almost no, in that 209 that we did last year, there's almost no revenue for Virginia. It's losing money, but it's the best license in cannabis. They just cleaned up the medical law. There was 50,000 patients in the state now, 15,000 in the queue because you couldn't get cards because you had the pharmaceutical regulator that couldn't process them. So the pharmaceutical regulator raised their hand and said, hey, legislature, we don't want to do this anymore. We're just screwing up the program. So they passed a law which got signed in April that has some other goodies in it to clean up the medical, law, which was, had some clunkers in it. And so we got it substantially cleaned up. But most of all, the number of patients should boom. So we have this medical growth. We get to build, our facility out in our stores, and really get, this huge infrastructure to prepare, in this, not so competitive market that we're in right now, and can prepare for it going adult use in 24, which is already done, by the way. It's not like we're waiting for that to happen. It's already signed and it's done. So, super exciting. So you have an outsized play on that. And then there's Ohio. We'll have 5 dispensaries. We have a grower processor. It's already built out. So we'll be there for Ohio when that happens. That's 3 of our 7 states. So like, Curaleaf, if you had that in Curaleaf, love Curaleaf. But if you had that in Curaleaf, okay, great. That's a little bit of growth because they have such a huge amount of business. If it was in, GTI, they have this huge Illinois business that will mature. So Jushi's a different kind of play. You could get that pop, when things happen good.
All right. We got another question from the audience.
Greetings, Earthlings. This is Adam at hubtreemarketing.com with a question. I've read a lot of investor decks for MSOs, and I've invested in a few. So I like, since I'm in the marketing game, clean takeaways. What is Jushi's edge compared to these other MSOs? I heard M&A and smart M&A, but give me 2 more to walk away.
Okay, so a good question. The M&A, by the way, is not to be underestimated, right? Because we could be really smart operating, and we could screw up this stock so quickly with M&A. We can over-leverage, and we could do bad deals. That hasn't happened. You know, I'm not somebody who bought a Florida license and just shoving money into it, competing with Trulieve. I avoided that. I sold a license in New York 5 years ago. All people have done is lose money, and I made money buying and selling a license. So, you know, the M&A is so important because you can screw a company up. So, but on operations, the other I would say was management. You know, we founded this company based upon top management, and I built business. I've been a private equity sponsor. You know, we can talk offline, but I have a lot of experience turning around companies as a distressed debt investor where I get equity, I get on the board, I change it around, billion-dollar companies, tons of experience. So we put together, we have a COO out of Anheuser-Busch. He worked for McKinsey, top cost they invented zero-based budgeting. Our head of retail is out of Urban Outfitters. We have great legal staff to complement the deal machine. You know, 7 different people. Human resources out of huge, you know, gas station company, which is very effective for our retail operation. Human resources is like your key thing, the hourlies, the people. They do a great job at Jushi. We're way ahead of the curve on retail and how we run our retailers. Human resource person is out of retail helping the Urban Outfitters guy, Brendan. You know, and then we have a new CFO we just put in place, who was a public company CFO before at Oakley and Luxottica, Saks. I think it was one of the big retailers, the big multi-chain stores. But I just gave you a few examples. We have a cannabis management team that's been doing it since 2009 in Colorado, and we keep supplementing that. We just got some great cannabis guys in our in our Nevada acquisition that closed. So we keep supplementing that and adding to that. We have great cultivars, great genetics. So it's a management team, what they bring, that's key. And we're not going to, so they'll do a great job operating the company under my direction with, you know, superior budgeting skills being developed as we speak. And then, you know, the deal machine, you don't have to, I mean, I'm the biggest shareholder. I actually put real money in. I just didn't, you know, win a few licenses and start promoting everybody. No offense to anybody that's, speaking after me or before me, but that's a lot of what happened. Real money in the deal, and I'm not going to lose it, and in fact, we're going to make it. And we're not going to over-lever and do something stupid on the M&A. In fact, we've created value, a lot of value on the M&A.
Awesome.
All right. I think that's time, right?
Well, one more question for you.
Okay.
If we have any more questions from the audiences, we'll love to capture that. But what are you most excited for with Juicy's future?
So listen, I love this environment. You know, it sounds crazy. You know, the stocks are down, and you know, I'm going to sound like, you know, I did stress debt, and we were called vultures. It wasn't a nice term, and I don't like to be called a vulture or advertise that I was or, you know, could be a vulture, but and I'm not a vulture. But
not a vulture.
I do like this environment where I have like $100 million in cash. I have $65 million acquisition facility. Cresco and Columbia Care now are forced sellers of assets in states that we could use assets in. And now Cresco and Columbia Care is not buyers anymore. GTI is almost done. Verano's almost done. Truliev's got a little more to go. He's very disciplined. Kim's very disciplined. And done for a while. Curaleaf's been done for a while. So when you look at the acquirers, you know, it's basically, you know, and I just like to call it like I see it. It's us, Ascend, Heirs, and TerraSend. And so you don't have a lot of buyers. If you go state by state, they're full in some of the states that we're in. We're full in some of the states they want to get in. So there's not a lot of competition. There's a lot of single state entities out there. I'm super excited about the ability to take this company from 7 to 12 in the next couple of years in that environment.
All right, let's hear it for James one more time.
All right.
And Juicy Holdings.
Thank you, Kevin.
Great job, great job.